Good morning, everybody. It's Monday, July 8th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 6 3/4 at 417 1/4. November soybeans were down 19 1/4 at 1110 1/2, and December Chicago wheat was down 11 1/2 at 602. This morning, we had an export sales announcement of 135,636 metric tons of corn to unknown destinations. Of that balance, 50,800 was for 23, 84,836 for 24. Good morning, guys. Hope everybody had a long, nice weekend. Dustin, we've got obviously some stories here this morning. We had, a weather system that provided some hail through the kind of the upper Midwest, through parts of Nebraska, southern Nebraska there. But I guess share some thoughts here as we start this morning, and then we'll throw it around the room.
Yeah, thanks, Dan. Obviously, markets are looking at probably more the rain is coming up through the hurricane barrel, up through Illinois, right through the area that needs it most. And I think that's the focus of the market this morning. We have currencies really not doing much. The real has actually been kind of steady. So a lot of times when you see an initial sell-off, like we'll go and look to see if there's some sort of 1 or 2% move in the real. It's been helping to feed that weakness along the way. But the real has actually been fairly strong going into the end of the week, and I think that's maybe where some of the recent post first notice day support's been coming from as well. But as far as those storms, the hailstorms, it's always hard to quantify these things. I think when we had derecho, that was quite an obvious event. There's still argument happening amongst a lot of people at that time. I think at the end everyone kind of chalked it up to 300 to 400 million bushels from derecho. So how much are widespread hail events impacting national average? That's going to be nearly impossible to quantify in our opinion, but certainly not something we want to see. And we've had customers report a lot of full damage from that. One thing I would just note, I know this is not the best measure, but, all the rain and the saturation up there in that northwest Iowa, southwest Minnesota corner, that is showing up on satellite NDVI, as you'd expect it would. So we've been seeing a lot of reports on social media of what the corn looks like in that area and what it could yield. And so I think that's still something we got to see how we come out of that. I think for the most part, obviously we're kind of looking for areas where there might be concern right now, but for the most part, everywhere else looks pretty good. And, there's certainly a good possibility of hitting trend. It's just how much do the holes bring us down from that is the question. So
I think that's a good point. And Justin, before we hopped on here this morning, I thought you made a great point. It's like, what's the path for corn, in terms of price action? As we go down lower, profitability for some growers does actually increase when you lump together, different farm bill payments and things of that nature. So it's kind of, we're in a really interesting spot right here.
Yeah, I think so. To Dustin's point, we're going to have people that they're going to start trading, the yield with yields over trend. What if it's 2% or 3% above trend? So I think we're kind of in that phase of, the yields are good. There's too much rain in the forecast, as a headwind for corn to be bullish. At the same time, we're looking at, this kind of $4 to $4.20 area in D's corn. It's kind of a no man's land. It's kind of the worst spot to be in, unfortunately. It's sub $4. I mean, the best thing would be to go to $3.50 at this point, because you're getting double, triple payments for a lot of people. A lot of growers got really good crop insurance levels this year, either ECO or 95% private policies or some combination. So especially areas that have gotten clipped a little bit on yield, like that Northwest area Dustin was talking about, or areas that have gotten hail, or areas that have just missed out on the rains. Like they're in crop insurance payments, and below $4, you're arguing that you're getting triple paid, especially if you have some hedges on. So kind of stuck there. It's not a very fun spot right here. You're kind of in that area where crop insurance hasn't really kicked in for, the 80, 85% policies. And farm bill payments haven't kicked in. But on the same time, how much can you rally with the rains in the forecast? So I don't know what you guys think, but I kind of see 4 to 420 is you can be stuck there for a while.
Right. Yeah, and it's really producer dependent, these situations, because if you're in an area that's going to be above trend, then all of your ARC County payments, your individual RP payments, those are further away from a pricing standpoint because you're making up from the yield, increased yield in that area. So that's, technically the worst spot would be maybe even below 4 in those cases. But if you're in an area, let's say parts of Minnesota that, if you're heavily dependent on harvest basis, which is typically quite negative in that region, and you're looking at severe yield loss, the lower the price goes and the lower your yields are, the more revenue you're actually going to receive because you're getting paid at a zero basis on those insurance policies. So much different type of strategy for those two producers, because you're if you're looking at on a per year basis of like what's the best thing to do just for the 24 season, disregarding what 25 revenue is going to be. In a lot of cases, it looks way greener, way more profitable at 350 price, especially when you're kind of countering a negative basis with lower yield.
Ben, what's on your mind here this morning?
Yeah, I think all those things. This is going to play out over time. When I look at where we have to go over the next 8 weeks, it feels like it's just some little cuts here and there. But I think Justin hit it on the head. It's hard to overcome rain that's dialed into the places that looks like we need it most. If for some reason we're disappointing rains, I think we could see a little bit of a short covering pop. But I think anything rally wise for now will be sold outside of a bigger event or really poor finishing weather that might catch some people's attention. I think globally there's some issues in different places that are concerning, but not enough to overcome lots of rain in the U.S. and a producer who is undersold again. I hate the pain spot that we discussed also between Dustin and Justin, between call it 390 and 415, 420. It really is a no man's land, and it makes the marketing component even a little bit more challenging if you're really creative on how you're going to handle this, especially if we're looking at a surge down to like true crop insurance levels. How do you handle that into the end of September? I think that with the grower not being able to roll basis contracts from SEP to DEES by most commercials, it even makes that a little bit more of a price pain point should things finish well in the corn.
Oh, very good. Any closing thoughts here, comments, guys, before we move over to Rylan?
No.
Good. Okay. Rye, last week saw cattle slaughter down 15.1%, pork production down pretty significant, 16%. Slaughter was down 15.5%. So production numbers down a little bit there last week. What are your thoughts here as we start the week?
Yeah, it was a holiday week, so I don't think that's going to shake anybody or at least push anybody in one direction or the other. I think it was pretty much anticipated. And I would argue that maybe even on the pork side of things, hog slaughter was a little bit heavier than expected, and it just kind of keeps the trend kind of down right now. It just seems like we are swimming in pork supplies right now, so cash keeps on going lower. And even at this time where we see a big kind of ramp up in demand, we're still just kind of consolidating around these levels. So obviously the hog market's looking for some real better news here. The question is just, do we get it, and what's coming down the road? I mean, typically we see prices start to fall back from here, kind of reach that seasonal top. So there's still some caution here, but it just feels like the market's priced in quite a bit for right now. Otherwise, we know that the managed money has still been getting short here and just kind of keeping the press on the market. We have seen a little bit better momentum just over the past 2 weeks, but it seems like we really just need a cash-led kind of rally here, or something new from the export side of the market to really see us kind of pick our head up out of the water. As far as the cattle goes, kind of an interesting trade on Friday. We're just blasted to a new high for the move. August traded to the highest level since October 3rd. So like the cattle market just hasn't shown any signs of slowdown whatsoever. And it looks like that, cash was a little bit steady. I would say just 190 looked to be the trade. It's a little bit of question mark here just to see what the actual data says today when those reports kind of come out. But beef prices are still moving higher. I mean, this is the time when we typically reach that seasonal peak. So hopefully we could see wholesale start to come down. It just, if it's anything like last year, we didn't see any real significant movement, and then we were just able to packers were able to hold up the market for pretty steady throughout now till the end of the year. So we'll see if that is something that is going to be able to happen this time around again, just in the face of kind of tight supply. So just looking for looking for maybe a little bit of follow through selling, but to start here. But otherwise, I think everybody just wants to kind of see how cash shapes up this week. Another steady, possibly even lower trade is going to make people feel like we kind of topped seasonally. So I think it's just something to be cautious of.
Very good. Appreciate the input there. A couple of things administratively here. We're going to get crop conditions out this afternoon, 3:00 Central. And then we will have Friday will be the next USDA crop production WASDE report. That'll be 11:00 Central. And we'll talk a little bit more about that as the week goes on. We get some estimates and things of that nature. So anyway, that'll put us on a wrap for today. Every day
should
that the
get commitment
markets
of traders today too, right?
Yeah.
That's correct, Justin.
Yeah.
Yep. It's one day delayed there because of last 4th of July holiday. So yeah, we'll take a look at commitments. It'll be interesting actually to see, that fund position. I know it's always a lag behind a little bit, but still see where we're sitting there. By all estimations, Justin, I mean, kind of recordy, right? 350 or so. I mean,
yeah, for this time of year, especially, so they've been right, so far. So they've definitely got the momentum in their favor.
Yeah.
So just, it'd be interesting. I mean, it's kind of an experiment to see how short they can get going in. They're going to try to keep that short going into harvest pressure, I would think. To Ben's point, first notice day for SEP, they're betting on the farmer having to sell it to them to bail them out. So be curious how it works. Usually they've had to cover in the past. Usually we've seen that sometime during the summer where there's enough of a uncertainty that, it shakes out that big short. But so far we haven't seen that, and it's, the weather and everything's in their favor. And so are, interest rates and carrying charges and all these things that we've talked about. So I'll be curious to see if they can hold that short all the way through harvest.
Boy, it'd be one of the first years you could remember, right? I mean, that they didn't get one.
Yeah. All the way through the growing season would be interesting.
Yeah, definitely. No, good points there, Justin. Yeah, so we'll put that out obviously in our afternoon commentaries and then visit about it there tomorrow morning. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.